Steve and Paul and I like reading investing articles with catchy clickable titles like, I'm buying this FTSE 100 stock to invest like Warren Buffett. And I thought it might be fun to take some of these brilliant headlines and see whether we can write them differently using our own ideas. So let's see how we get on. To kick us off, I thought we might try this one. One stock to double down on in December. So I'll go first. When I think about this headline and spoiler, I actually wrote this article, so it is one of mine this time. I think I'm looking for a stock that's been falling this year, but where the underlying investment thesis is still intact, and I think the business is in good shape, and I think it's decent value because of its lower price tag. So I did write this over at fool.co.uk, but my pick for this was Amazon. Amazon down 48% at the time I wrote this year, has a PE around 88. That's mostly because its earnings have been crushed by things that are not cash costs. So they had a 7.6 billion in total over a number of quarters. This was right down in their Rivian investment from before. That went not very well. And I've been hearing good investors, people who I genuinely respect their kind of input on stuff, saying, well, look, Amazon's expensive at a PE of 88 or something like that. And when I start hearing that kind of thing, I start to think to myself, people are just writing this off a little bit too quickly in this situation, because it is indeed around a PE of 88, and it's absolutely true that Alphabet has a PE of around, I think, 19 last time I looked, and 19 is a much smaller number than 88. And they're both very good companies, both very big, both very strong. But that makes me think that people are just looking the wrong way on Amazon a little bit at the moment. So net sales were up this year, online sales were up 7%, subscription sales up 9%, advertising sales up 25%. Amazon Web Services revenue, that real engine that we look for, was up 27% to around 20 billion or so. Inflation has been showing up there as it's been showing up everywhere else. So operating earnings, so discount stuff like write-downs for the moment, were lower. But that's kind of what I expect. Amazon, I think, has a bunch of assets here that are really quite valuable in some ways. They have a very good line into people's houses. They are increasingly becoming the shop that you go to for anything that you're going to buy online, Christmas shopping, Black Friday, or whatever. And they also have a kind of business model that I really like. I quite like businesses where they don't have to rely on battling it out with pricing in order to make money. So Amazon, of course, has Prime, which is a subscription service, which means they have revenue coming through the door regardless of what they actually do or don't sell. And that's pretty high margin revenue on the whole, because a Prime subscription doesn't really have much of a kind of cost to Amazon. They have various other costs, but we can come back to those in a bit. And that means that they, of course, can compete on price a bit more aggressively than somewhere that doesn't have this kind of thing. They also have AWS bringing in revenue, fairly obviously, and doing so in quite a heavy way. That means they can always charge less than someone who doesn't have these kind of things. If you're a shop and you're trying to compete with Amazon and all you do is sell things, then, well, look, your only income is going to be the margin you get from between the cost that you bought the thing at and what it costs you to get it in the shop and the price that you sell it at. Amazon doesn't really care about that. It's a bit Costco-y, in my view, from what I can see of it. So Costco charges a membership fee and then basically just drives down all the margins to approximately zero. And then why would anyone shop anywhere else rather than Costco? It's that much cheaper for them. Amazon, I think, has something similar going on here. You charge a Prime subscription, you get AWS revenue coming through the door, drive down all the prices, and more people shop there. Therefore, they buy your kind of Prime subscription, and the whole process kind of rinses and repeats. Cash flows don't look like they're there very much, but I think that's the thing that's going to happen and going to come eventually with this one. So I think Amazon, down 40-something% at the time that I wrote it, is my stock that I have a big investment in and would double down on in, well, December or probably 2023 as well. Steve, you own this as well.
Yeah, and I've been buying a lot of it this year. I've bought it around the $100 mark again and again and again, and I'm just looking now, it's finished the day at 88.45 as well, which is like, hurry up, payday. I would really like some more. So I think people are just totally, I've long thought people have, and we've long demonstrated that we think people are looking at the wrong numbers on Amazon. Anybody who looks at the PE number and just automatically dismisses it is just completely missing the business as a whole. If Amazon Retail can churn out 2.5 to 3% net profit margin, AWS continues to come along delivering high margin, the Amazon marketing arm comes along and delivers decent margin, then any other thing that Amazon adds to the business, be this, Zoox or the aspects of Alexa that they're working on, or their other bets like the pharmacy, robo-taxis, anything else that they bring along to do that will be excellent things for Amazon. But even if they don't deliver any of those things, you're going to get high margin AWS, high margin marketing. They're going to sort out this logistics and deliver a 3% margin on the shop. That's going to be a lot of money. That's going to be a lot of cash on that bottom line. The fact of the matter is, and it's a real bitter pill to swallow with Amazon, is that they don't care about making net income. They really do not care. So if you're looking at net income, which obviously would generate your PE ratio and saying that's too expensive, you're just not looking hard enough. At the moment, I'm looking, they're a £900 billion company. Now, I would pay that for AWS alone. Never mind all of the other things that you're getting on the side of it, which are growing at rapid paces. It doesn't even matter if the retail arm doesn't grow very much anymore. If it grows at 1%, 2%, or 3% every year, that doesn't matter, because AWS is getting to such a scale where that has pushed the needle for Amazon now, and the marketing will come along and that will also push the needle for Amazon. So I was watching a couple of interviews with Andy Jassy, and he was handpicked for the CEO of Jeff Bezos. Jeff Bezos said to Andy Jassy, if you won't take the job, I won't stop working at Amazon. I won't retire. I won't go to chairman, because Andy Jassy's got the same long-term focus that Bezos had. He's not somebody who was going to come and go, right, I have to change everything because we have to make profit right now. That was like anybody who says that Bezos is looking at this share price and going, right, I'm going to Bob Iger him. You know what I mean? I'm going to get in and
Bob
get out.
Iger,
Yeah. he's not going to do that, because he knows that everything that Andy Jassy is doing is exactly what he would have done, which is continue to double down on the bits that, the new arms of Amazon that will continue to make this company bigger and bigger and bigger. Amazon's biggest problem is regulation, nothing else.
Yep. They also have an advertising business, which is kind of coming in nicely at the moment as a little add-on. Amazon's an interesting company, and here's a kind of intangible feature that I quite find, I want to say like about it, I think respect about it more than anything. A lot of people hate them. A lot of people really don't like Amazon for good reasons and bad reasons, and we can get into which ones are which out of these. But some people just don't like the fact that Jeff Bezos is really, really, really rich, like insanely rich, almost absurdly rich, and some people think immorally rich. And there's also a kind of issue around the fact that this has basically been built on the labour of deunionised workers. No two ways about that. But despite that, and despite their very strong outrage at Jeff Bezos and Amazon, a lot of people who think that do shop there, because they have the best delivery, the best fulfillment, the best range of stuff, and probably the best prices of anything as well. And unless you really want to spend time hunting around for something, which a lot of people don't, people really don't like it, but they do shop there.
It's not even like, hardly anything now is even Amazon curated. Almost everything is third-party sellers going on and listing a product and selling it. So you've essentially got a shop where third-party sellers come on, list a product for you, do all the writing, take all of the photos, and then spend money marketing it to people and getting it to the top of the search rankings. And we come along and buy it, and for a fee, Amazon will also deliver it. So Amazon, is so low touch on these products. It's crazy that the margins aren't better. And you would think when they do finally, turn the screw on the retail arm, I bet you that it could make more of a profit than Costco, because they're not looking to. I mean, the reason you buy things from Amazon isn't always on price. I disagree with that. It's the fact that it turns up on your door the next day. And in some parts of the UK and the US, it turns up the same day. And that's just incredible. I mean, back when I was, a young lad and Amazon was first on the scene and it took 3 to 5 days to come. If you were looking to buy, I don't know, say for instance, a PlayStation game, there was a real option of just going to Asda and getting it rather than getting it from Amazon. But now when you're telling me it's going to be here, the very next day or sometimes later on in the day, I'm not going to Asda.
Yep. So the kind of message, I guess, from me for December is long Amazon, short Asda. If you can find out who owns Asda, is Walmart Asda?
Not anymore. They sold it to
haven't they? Yeah,
private fund. Sure.
Okay, so short Asda if you can get hold of something that represents their share price.